In this video, we have a dividend stock that seems to be performing very well with a high yield and does have promising potential from a few noted analysts. So we got a lot to go over in this video. What you're looking at right now is my dividend stock portfolio. Been performing pretty well over the past week. I know I'm probably posting this on a Wednesday. It is more common for me to post Monday, Wednesday, Friday, but my schedule has been very overloadedly busy over the past few weeks, and it's going to be very busy for the next week, probably 2 weeks to be completely honest. So I'm doing my best to post videos as consistent as I can, but the schedule might be a little bit scattered. So thank you for working with me and all that good stuff. But let's go ahead and talk about the dividend stock that I'm talking about today, and that is ticker OFS. As of yesterday, I'm recording this on Tuesday, I'm going to post it on Wednesday. As of yesterday, the dividend yield is 8.85%. It's a massive yield. They're a BDC, a business development company that specializes in direct investments in corporate acquisitions. The company provides capital solutions via debt and equity investments. They want to finance in American middle market companies from a number of industries. These industries that they invest in is mainly aerospace and defense, business services, consumer products and services, food and beverage, and the list goes on and on. So they don't just specifically invest in one direct sector, which is really good to see. I like to see the diversification, and it gives them more potential to make more money in a variety of economies. You know, maybe the economy is not performing well, so consumer staples might perform very, very well. But the firm invests in the U.S. between 5 million and 35 million to revenues between 10 million and 200 million. That's their kind of target, which is a good target in my personal opinion. But let's talk about the stock. Up over the past year, 45.18%. The past month alone, up 26%. 6 months, 24%, and year to date, up 19%. They have a forward PE of about 10.5, which is pretty undervalued if you ask me. A nice yield, a forward yield of 8.79%, and a market cap of $171 million. Dividends have been increasing pretty solid since June of 2020, kind of the whole COVID coincidences that happened. They've been continuously increasing, and they just recently increased from 25 cents to 28 cents, which is a really good thing. Their dividend scorecard, we'll talk about the payout ratio in a second. It says 91%. It says a 5-year growth rate of minus 6.15%. However, over the past 2 years, it's been pretty solid increasing. Because of COVID, there was a drop in their growth rate on their dividend, but it's been very steadily increasing. We just recently missed out their ex-dividend, and they're going to be paying their dividend out in 2 days on March 31st. So let's talk about this. They have an earnings per share in the trailing 12 months of $4.24, which is insane. Okay, a PE ratio of about 3.07 in the trailing 12 months. The forward is a little bit higher because of the price that they've seen and different things like that. Now, their revenue and earnings growth is insane. 37% revenue growth and 49% earnings growth. Payout ratio says about 21%. So I want to go ahead and kind of look at their real financials. In the past quarter, their net investment income, or this is actually Q4 of 2021, their investment income per share is about 33 cents, and their earnings per share was $1.27, which is huge. They're making a lot of money, and one thing that stood out to me kind of was this, their portfolio value. It was a lot higher in Q3 of 21 compared to Q4 of 21, and it's mainly because of economical factors. Things like market decreases because of inflation and concerns that were more spooked back then, and it did cause negative sentiment on the markets, and it caused negative sentiment in their portfolio. So it kind of provides that buy the dip thesis, that buy the dip fundamentality, because, well, if they buy the dip and they continue to invest in these companies at per so-called cheaper prices, it gives them bigger margins in the potential long term, which I do believe could very much benefit this company. And looking onto some more key things, such as the company's income, okay, 14 million to 14 million to 10 million to 68 million dollars. That's a lot of money they made in the trailing 12 months. Quarterly, these numbers are kind of all over the place. 13 million, 7.7, 23, 14.5, 22. So they are very volatile, but I think it's semi-good because, when you invest in a BDC, you got to understand not everything is going to be completely consistent, and the fact that the overall long-term trend is upward is a good sign. looking at this company's balance sheet. The balance sheet is pretty solid, assets to liabilities. Cash flow, the cash flow is not that great, and that's kind of a red flag for me. I'm bringing upon these investment opportunities to you. I'm not saying you have to invest in them. I'm just bringing upon opportunities. That's what this channel is for. I'm personally not invested in this company, but a lot of analysts are actually giving it good sentiment right now. We're seeing operating cash flow is negative, which is not the best thing you want to see, but their end cash position does continue to increase since 2019, which is a pretty good thing. Analyst expectations right here, though, earnings per share, they expect to drop by 9 cents over the next year, and it could be because of economical factors, interest rates rising and things like that, inflation, Russia, Ukraine tensions, and factors such as that. But that's the main thing about this company you need to know. If we go back right here, their increase of dividends was a 12% increase, and according to Q4 database, 2 hedge funds were bullish on OFS compared to 1 fund in the prior quarter. So it seems that more hedge funds and more analysts are starting to pick up on this company and overall wanting to invest in it. So let's just go ahead and look at their website. We're seeing OFS Capital offers customized capital solutions that best meet the needs of owners and managers. Looking even more into this company, if we just go ahead and see who are their current investments, who are they invested in right now, what we're going to see is all. We have a number of companies, okay? Honor Health Network, DRS, etfs, Health Fusion, a lot of health companies in this section, online tech stores, okay? A lot of different investments. So one thing that I like to see with a number of investments is that mainly if one of these falls apart, it's not the end of the world for them. They have a number of investments, too many for me to count just right now. BCC Software, they have a variety of industries and different things that, they're looking at. So it's a pretty solid foundation. They have private equity, management things that they're looking into, different things that we really love to see when it comes to investing in these types of companies. Now, if I want to go ahead and show you the institutional activity, inflow has been a lot higher than outflow, 4.51 million in outflow compared to 10.03 million in inflow over the past year. We had a lot of inflow in Q2 and Q1 of 2021. And in Q4, we actually did have more outflow than inflow. If we go look at these numbers, about 1.41 million inflow to 2.15 million outflow. Not the best and also not the worst. I think a lot of investment companies, kind of like hedge funds, decided to steer clear of BDCs just because of the markets, and they might not see great returns on their investments right now because of the markets, because of the economical factors, Russia, Ukraine, inflation, interest rates rising, things like I talked about earlier, that is going to affect them negatively, but it does give you that opportunity to buy the dip. I think that people started to pick up on this trend as we saw the stock increase incredibly over the past few days. Especially after getting a yield of 8.79%, that's nothing to complain about in my opinion. Especially with 12% growth over the past quarter on that yield, that's really good. And then Morningstar analysis gives this stock at a 15% discount, fair value about $14.92. So there is still a gap for you to fill in and make even more money. Now, the last close is a little bit different, so I'm going to go ahead and refresh my computer because the market closed while I was in the recording of this video. We'll see right here. Just give it a second for it to load. The discount is still there, not loaded yet, but $13 to $14.92, about a 15% discount that we're looking at right now. But that's going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to the channel, turn on post notifications to miss out on any future videos. Check out M1 Finance using the link in the description below. I did get an affiliate referral for $50, and as soon as I went in, I put in a buy order for $50. Check it out. It's free money. Go get in that free money while you can. Thank you for signing up and making it to the end of this video. Leave a comment. I always love to hear your input, and I will see you at the next video.